Early on Friday, we see stocks come crashing lower. Then look, we overshoot the 50-day moving average. What do? We reject, we come back up. The question now is this nothing more than a trap? Are we about to set a lower high and potentially go much lower? Because right now we have two conflicting signals that I'm going to share with you guys later in this video. Now, with stocks getting a major bounce out there off the lows on Friday, we come over and look at the fear and greed index. Right now, we're sitting at 21. We are still over in the extreme fear territory. Then as we come over and look at the most recent investor sentiment survey, what do we see? Well, the bulls dropped down from 44, dropped down to 38. However, the bears also dropped down from 36.9 to 36.3. And the category that really grew was the neutral category. It grew from 19.1 to 25.8. Now, with the government being shut down, this could potentially pose a problem for the market. Government is on the longest shutdown ever, and now the Supreme Court just issues an emergency order to block full SNAP food aid payments. And this could be a problem, right? It's not just the consumer that needs the money so they can not only feed themselves, but what about the other stores that benefits of the SNAP program? For instance, Walmart and other grocery stores. How long before this is going to trickle down? And it really becomes an even more dire situation, because then we look and what do we see? U.S. Airlines. Then we see articles like this. U.S. Airlines cancels more than 2,500 weekend flights, largely due to the government shutdown. Then we look at this article, thousands of flights delayed as FAA cuts snarl major airports. And scroll down here real quick, 5,000 flights have been delayed, 1,100 flights canceled as reduction went into effect Friday at 40 high traffic airports. But notice right down here, the FAA mandate flight cancellation means 4% reduction this weekend. It will ramp up to 6% by November 11th, ramp up to 8% by November 13th, and up to 10% by November 14th. Well, you know what? November 14th really is not that far away. Then with a little bit more doom out there, Duffy warns flight cancellations could top 20% if the government shutdown drags on. And this is going to be a problem, and we're already starting to see effects of this. For instance, we come over and look at the data we had on Friday. Preliminary consumer sentiment came in at 50.3, prior reading 53.6, and they forecasted a reading of 53. Then we come over and look at preliminary inflation expectations. We had a reading of 4.7. The prior reading was 4.6. Let's not forget, we're 31 days away from the next FOMC meeting, and the market's really priced in with a 66.9% chance that the Fed will be cutting rates once again. Now, this could be problematic out there because with the Fed cutting rates, what do we think this is going to do to inflation? It's probably not going to help it. If we come over real quick, we take a look at the dollar index. Dollar index came right down to a structure breakout point, and we're going to see, will this level hold? If this level holds and the dollar continues to gain strength, watch out. That could be a problem out here for the stock market. Then with the dollar going up, let's go ahead and take a look at what is the precious metal gold doing. We look at gold basically just hovering near the 38% retracement. Then as we come over, we start looking at the 4-hour chart. Keep in mind, we're looking for price to come all the way down to about 3,800 in gold. Now, the way I derived this was we have an A to B equals C to D pattern. Now, if you're using TradingView, you can go right here to your drawing tools, grab your Fibonacci extension tool, and just start off right up here. Measure A to B, then pull up for the correction, B to C, and then notice that's going to give us our price completion right down here, right around that 3,800 price point. Now, as I zoom this out a little bit, we can see that consolidation has been taking shape. However, we start to roll over, we get past this high volume area to the downside. Watch out. I think we're going to flush the first low right here at 39.37, then go down, tack to the lows down here at 39.02. Then we can start getting into the 3,800 price points. Now, something else I want to bring up as we look at the dollar index, and that is going to be the yields. Let's look at the spread between the 10 and the 2-year yield. If this starts to steepen up, watch out. That's going to be problematic. Now, there is a potential the government shutdown does end this weekend. And actually, let me know in the comment section down below. Do you guys think the government shutdown is going to end in the near future? Let me know your thoughts in the comment section down below. If we see the spread between these two yields really spiking up, like I said, that's going to be problematic for the stock market. Then we come over and look at the Dow Jones versus Transportation Index. Here's something that has not happened in quite some time. We've been talking about how the transportation index keeps making a series of lower highs. Well, notice as we look at the Dow Jones up here, we had that shooting star candle. This week, we confirmed it to the downside, but then we saw a transportation index actually spiking up. breaking not only a swing point, but also breaking this declining trend line in the stock market. But wait, we come over, look at the SPY versus HYG, high yield bonds. We see the SPY put in a nice little hammer candle right here. And we also see HYG firming up off the lows as the SPY was going down. Notice HYG already started to turn and was giving us a heads up. But if later this week we see HYG starting to roll back down, that is going to be a warning sign that we also want to pay attention to as traders. So now that I've shared with you guys one of the conflicting signals, and actually it's two. One, HYG was already starting to firm up before the market actually bounced, and also the transportation index breaking out above the highs. However, later I'm going to share with you guys another signal that may not look quite as bullish as those two signals. I want to let everybody know right now, Tip Profit Trader, 40% off all their evaluation accounts. Best yet, zero activation fee. To take advantage of this offer, use the link in the description box down below. Use promo code epitome at checkout. Now, as we saw our stocks really bouncing right off that 786 level out there on Friday and spiking that 50-day moving average and closing back above it, we come over and look at how the indices fared across the board and notice all four of the indices actually rallied up at the end of the day. However, we look at advancing issues versus declining. We had 56% of issues advancing on the day. But then we come over and start looking at the sectors across the board. Notice on Friday, almost every sector was in the green. However, one sector that was really struggling was technology. It was the second worst performing. We only had two sectors in the red for the entire day. However, as we come over and look at the 1 week performance, now we start to paint a little bit of a different picture. We can see technology for the week was by far the worst sector out. It was over double of any other sector to the downside. And we kind of had a mixed bag. We had 1, 2, 3, 4, 5 of the sectors actually in the red. And energy was the leader out there for the week. But notice it was only up 1.34, where technology was down 4.39%. So now as we look at the SPY on the weekly time frame, and notice last week we talked about this inverted hammer right up here. And notice this week we did get confirmation of that candle. And with this week though, did we close at the low of the session? No, we almost closed back in 50% of the range. Now we were slightly below 50% of the range, but still not nearly as bearish of a close as I'd like to see if the market is going to get good, if the market's going to continue lower. Now, if we look at the MACD indicator out here on the weekly chart, this is one of the other signals. So I shared with you guys, HYG was looking more bullish. Transportation looking more bullish, but look at the MACD indicator. It looks like it wants to cross and go back lower. And if we do start to pull back on the weekly time frame, one of the areas I will be watching is going to be right here, right around 610.85. That's going to be the 38% retracement out here on the SPY. Then as we look at the daily chart, this is a little bit different with the MACD indicator. Notice we've already got that bearish cross and we're trying to make our way down towards the zero line. And notice on the daily chart, we came right down, basically testing that 78% retracement. However, if we come back down to try to potentially run the wick out there, this is going to be problematic out there because everybody out there is talking bullish, bullish, bullish. We hit the 50-day moving average. We get a hammer candle. The market is going to rally back up and take out all-time highs. And it may, however, we also want to be open-minded because we have a lot of problems out there in the economy that could spill over into the stock market. So I want to be on the lookout. Do we come back up? Maybe form a lower high and then ultimately roll right back down, or do we just simply blitz right on the way up? If we look over here on the 4-hour chart, MACD indicator is already down just below the zero line, and we'll see if it starts to firm up here just a bit. Now on the 1-hour chart, you can see the MACD indicator just about to cross to the upside, and on the 30-minute chart, we've already had that bullish cross of the MACD indicator. And notice on Friday, we were able to close above value area high off of the daily profile. Now, as long as we stay above that come Monday, then I do think it lends to the possibility that we have more upside testing to come. But if we start coming back down below that price point, watch out, that could spell trouble up ahead. Now we come over and look at how the CTAs are positioning out here in the S&P 500 and notice they're starting to position to the downside. Now this could also be very problematic out here for the market, especially if we really see this start to accelerate to the downside. Then we come over and take a look at some of the GEX levels that we have out there. Now, to the upside, there are some levels I want to pay attention to. 681 along with 701 out here on the SPY. But notice right down here to the downside, right here, right around 670 or so. If we flush down below it, we could see some fast price movements much lower, maybe even down towards 661 and maybe even down towards 649. So if we looked at where we closed on Friday, we closed right at 670.97. So it won't take much to really push us a little bit lower. The low that we saw was right down here at 661. So it's really no surprise that's where we bounced from. That's another high area of Gex. But if we do break below that gamma exposure level, that could open the door all the way down here to 649. If we just scroll down here real quick, where is 649 on this chart? Well, if you notice, not only would it be enough to break this low, we'd break the 786, but we'd also undo that entire last part of the move that we had on the way up. And again, the real question is, do we bounce up a little bit more, put in a lower high before we ultimately come down? Now, something I am watching over the weekend, like I do each and every weekend, regardless if you trade it or not, I keep an eye on Bitcoin. One, it's the only market that's moving, and I kind of use it to gauge risk on, risk off. Now, we will look at the futures markets for the S&P here in just a moment, but look down here at Bitcoin. We have a price completion down here at 93,566. And for all intents and purposes, all we have done is push down, and we have a consolidation. It kind of looks like a bear flag to me. And if Bitcoin really starts to give that up, watch out, lower prices could be up ahead. Now, as we come over and look at the futures markets for the S&P real quick, notice that last 4-hour candle was quite bullish. And even the one before that, we had that nice hammer candle as well. Now, we were able to close above value area low, which comes in at 6719.00. The point of control will be up here at 6799.50, and value area high will be up here at 6857.50. Now, I do think there's a high probability we come up this week and try to take out that point of control, but I want to be on the lookout. If we start breaking back down below value area low, and really this high volume area right here, we're probably going to flush right back down towards the next high volume, 66.68. Then we're probably going to go ahead and run that low and go ahead and continue lower. Now, if we zoom this chart out a little bit, we look, where might we want to go? Well, if I really zoom this out, we have some untested point of controls way down here at 6,400. I don't think that's going to be in the cards out here this week, especially as we look at the economic calendar. No news on Monday. Tuesday is going to be a bank holiday. Wednesday, we have Waller speaking. Thursday, we're supposed to get the CPI data and the unemployment claims, but the government may still be shut down. And then Friday, we have PPI data, which the government shut down. So we may only end up getting retail sales. So I really don't think we have the catalyst that gets the market really juiced to the downside quite that far. I think more likely than not, we're going to bounce up here just a bit. Now, I do want to go ahead and pull a Fibonacci retracement from the swing high right down here to the swing low. Now, notice the first area where I think the market could have a little bit of a problem would be the 38% retracement. Quite often, the market will hesitate there, maybe go sideways, pull back a little bit. If we pull back, maybe come down towards the high volume area. And then if we're going to go up higher, maybe towards the 50 or even 61.8 level, maybe then we form some type of A to B leg, B to C leg, and then we project up there for D to go ahead and get that price completion. Now, when we come over and start looking at the daily profiles real quick, notice on Friday, we were able to close above value area high. The rule behind that is anytime we close outside of value, we expect the next 1 to 2 sessions, we'll come back and visit that level. Well, since this profile is a daily volume profile, one session would be 1 day in time. Now, notice on Friday, we were unable to take out the P point. I may want to be aggressive early in this week to see if we can come down and potentially take out that value area high. Now, if we do get below value area high, and before we target this point of control, I want to target this minus development area first, 67.15, then the point of control, 66.97.25, and then value area low at 66.75. Anything below that, that's where we really want to refer back over to the weekly charts and really probably come down towards some of these other minus development areas within the profile, 66.20, and then down here at 65.81. Anything below that, well, then we really want to start picking off the next high volume node at about 65.26. Now, keep in mind, this week we still have a lot of earnings out there as we're still in earnings season, and we've had some positive earnings come out. However, we've also had some very negative reaction to some of those earnings. So this week, if we look at the earnings with the big expected move out there, Okla expected to move plus or minus 15%. Now, we come over and look at the QQQs real quick on the weekly chart. Notice we gapped up last week. We engulfed that whole entire prior week's candle, and we closed in the lower third of the range. Now, we were able to produce a little bit of a wick on the bottom of that candle, but I also want to draw your attention right down here to the bottom. Notice the MACD indicator looks like it's very close to getting a rollover, and we are at elevated levels above that zero line. Now, some of those areas I may want to pay attention to would be this prior all-time high right here, about 540.94. If I were to grab a Fibonacci retracement, measure from the swing low right up here to the swing high, Notice that 38% retracement is just above that structure breakout point that we broke out from. That was a prior all-time high. Now we come over and start looking at the daily profiles real quick. Notice on Friday, we have a nice hammer candle out there. And if we even throw on some EMAs real quick, we are able to spike below the 50 period EMA. Now this is where it's going to be critical. So far, the 786 level has held. However, if we start running back down there, could this be a case where we run the wicks? And if we start breaking below the candle on Friday, well, you guessed it, we're probably going to go ahead and go all the way back down and take out the lows from this last leg on the way up. Now, if we look at the MACD indicator, it is crossed to the downside and it is making its way down towards the zero line. But I also want to caution you guys, we still have a few gaps up there that need to come back and get filled. If we jump over, look at the 4-hour chart, you see one gap right over here, another gap right there, and another gap right here. So we've had 3 unfilled gaps to the downside. And going back to April, that is a very rare event for this stock market. Now on the 4-hour chart, MACD indicator screaming to the downside. We're just now starting to get below that zero line. As we look over here on the 30-minute chart, notice we already had the bullish cross of the lines and we were able to close above value area high, which value area high was 606.75. Highly probable that either Monday or Tuesday, we come back and we try to test out that value area high. However, will we be able to fill the gap before we actually start to pull back here just a bit? Now, as we come over look at the Nasdaq futures, look at the range we had last week, 1,556 points. That is a massive range. The prior week, 699. Week before that, 766, 769. And even back here, this was a decent range at 1,235. However, that was no match out here for this week. Now, the last 2 4-hour candles were very bullish. We had a nice wick on this candle, and then we had a very bullish candle on the last 4-hour candle of the day on Friday. Now, notice we were able to close above value area low at 25,091.75. The point of control is way up here, 25,705 and a quarter, and value area high will be 25,887.25. Now, notice we have a minus development area right up in here. And instead of trying just to target the point of control, one of the things I want to do is maybe try to target some of the high volume nodes first. First one being around 25,317. We can also grab a couple Fibonacci retracements. One, measure this last leg on the way down. You can see on Friday, we violated the 38% retracement. More likely than not, we'll make it to the 50 or 61.8 level. However, we can also do a retracement of the entire move on the way down. Now, from the entire move down, we are not quite yet at that 38% retracement, which comes in right above that high volume node that we just spoke about. So the 38% retracement would be 25,353.25. Now, when we come over and look at the daily profiles on the 30-minute chart, notice we were unable to take out the P point. Now, there's a 68 to 70% chance that we test it at least once per day. However, Friday was not that day. Now, value area high off the daily chart. This is going to be a high probability target I want to focus on early this week, 25,133.5. If we get below that, then instead of targeting the point of control, I want to target this high volume area about 25,091, then the minus development area about 25,040, then the next high volume area, 25,004, then the point of control at 24,939, then this other minus development area, 24,891, value area low. Anything below value area low, I really want to be open to the idea that we're going to come back down, rerun those wicks, and we zoom this chart out here just a bit. Notice we have a couple untested point of controls down below us. One of them being 23,659. I don't think we'll hit that this week. The other one, 24,073. However, if we break this low, my eyes are being drawn right over here towards the minus development area, 24,305. However, notice I said if, right? If we are able to break that low. So it's an if then syntax. If we do not break that low, I do not want to be hyper focused on that level. Instead, I want to be looking for potential retracements on the way up. Then I want to look for signs that could we maybe be trying to put in another lower high, setting up that A to B equals C to D pattern on the way down. Now, if you guys like to learn about take profit traders, hedging rule, then you want to make sure to check out this next video right here.